So the South African government has secured a low-interest development policy loan with the World Bank valued at $750 million. That's about 11.4 billion rand. The loan is aimed at supporting government's efforts to accelerate its COVID-19 response. So for more on what kind of questions we should be asking ourselves about this loan, let's bring in Chief Economist at Econometrix. That's Dr. Azar Jammine, who's with us now via our video link. Dr. Jammine, always great getting your insights on these issues. Thanks for making time. I suppose one of the first, perhaps even obvious questions is, how will this loan be financed?
Well, it's a loan. It will be financed in exactly the same way as the World Bank finances all other loans to emerging markets. It has already set aside about $157 billion in loans to African countries to help them with COVID-19, and I suppose this forms a fraction of that amount and is directed towards South Africa.
Yeah, I mean, we're told of a low-interest rate loan, and I'm not sure if we've actually been told what that interest actually is. Have you come across that figure?
Given that it's a dollar loan, interest rates in dollars vary from between 0.5% and and about 2%, depending on the duration of the loan. If it's a 5-year loan, then it's probably in the region of 1 to 1.5%. Now that is where the big attraction of getting such a loan comes from. That compares with the 9% interest rate that the government has to pay for an equivalent loan that it borrows domestically. So by taking on such a World Bank loan, it is saving somewhere between 7.5% and 8% in interest on that amount of money, which translates into almost 1 billion rand per year. Now, in the broader scheme of things, with a budget of over 2 trillion rand, that is not a huge saving, and the loan is not huge. I mean, 11 billion in relation to a requirement of, for expenditure of over 2 trillion rand is not huge. But it certainly helps to save 1 billion rand a year, just purely on interest rates.
Right, absolutely.
The big risk is, of course, that the rand depreciates, but that is a risk that one faces continuously. Conversely, one could argue that you get the benefit if the rand appreciates and you pay the money back in stronger rands rather than in weaker rands at some time in the future. It is one of the risks that the government is taking, and the government has itself set aside a program to borrow around $5 billion in foreign currency loans out of its normal borrowing requirement in the region of 500 to 600 billion rand, or around $30 billion. So around about a sixth of its borrowings are really its strategies to borrow about 1/6 of all it borrows in foreign currency, which I think is a very sound principle, and certainly saves a huge amount on interest payments.
Sure. You speak about risk. I mean, one of the, call it, ancient debates around whether or not countries like South Africa should be taking loans from institutions like the World Bank is around what this will come at a cost as. You know that ancient old saying, there's nothing such as a free lunch. In fact, in the past, what we've heard is that these multinational institutions typically give money in exchange for these countries giving up a sense of their sovereignty. Is that something we should be worried about with this particular matter?
Well, theoretically, one, I suppose, could be worried about it. In practical terms, I would welcome it, because what the World Bank will have done is to sit down with Treasury officials and make quite clear what the conditions for that loan are. And some of them, for example, would be to constrain the growth in the public service remuneration bill, something that has been going out of control for much of the past decade. And in so doing, a loan of this kind actually imposes a certain discipline on the government that it might otherwise not have had. And to that extent, some would actually welcome it rather than be disparaging about it. Yes, that some of those conditions do remove some of the sovereignty of the government in determining exactly how it intends spending its money. But if it's to prevent profligacy and wasteful expenditure and corrupt forms of spending, then it needs to be welcomed.
In the past, of course, the concern has always been that institutions like the World Bank don't understand the very unique conditions of how emerging markets like South Africa actually operate. Again, I mean, these are old discussions that are literally in economics textbooks. In 2022, do you get the sense that those issues haven't necessarily been ironed out as yet?
I do believe that there are ideological approaches within the country who will argue that those issues haven't been ironed out and that these multilateral institutions are still basically operating on a Washington-based agenda. In other words, it's a way in which the United States is imposing its will and its desires on emerging markets. But you know, the World Bank is doing this with many, many different countries, and it is a form of assistance that I think has also increasingly been using a much more constructive approach rather than a dogmatic approach, as you will do this or else we won't lend you the money. I think more recently the World Bank and the IMF, for that matter, have been displaying a lot more realism in terms of the requirements of what emerging markets need. You know, there's a recognition that the old Washington consensus can be a recipe for increased inequality, and this has become a worldwide recognized problem. And so these multilateral institutions are only too careful not to fall into that trap of being accused of heightening inequality.
Right. The reasons behind this loan are actually pretty clear from both the World Bank and Treasury here at home. It's to try to help the government bolster its fight against the economic fallout of COVID-19. With that in mind, how should this money be spent if it is, in fact, going to lead this country into a path of inclusive growth, so to speak?
You know, I find that's a big question that is being asked all the time. The fact is that the government had set out to spend almost $100 billion on COVID relief. Some will say $500 billion. That was the original announcement. So $11.4 billion is only really a small fraction of what the government had set out to spend, to borrow money to spend on COVID relief. So, you know, it's a case of this forming part of that big expenditure plan that the government originally had. Take, for example, the determination now to extend the special social grant of 350 Rand a month, which is set to cost the country around 40 billion Rand per year. Now, a loan like this can accommodate about a quarter of that cost. So if it is used for that purpose, you know, so much the better. If it is used to purchase vaccines, that's also very helpful. The fact is that it forms a small part of a much larger amount that the government is borrowing to actually help it fight COVID and also provide relief to consumers and businesses who have been struck by the lockdowns and have been suffering as a consequence of that.
Dr. Azar Jammine, always great getting your insights on these issues. Thanks very much indeed for your time.